It is 11:04 a.m. Pacific Daylight Time. It's the 20th day of October 2025. This is episode 1193 of Bitcoin, and I am late, as I always am on Mondays. Generally speaking, anyway, Mondays is when I have a Toastmasters meeting where we convene and throw the gavel at 6:30 a.m. That's right. And I have to be there at 6 to set everything up. So by the time I'm done at 7:45, I've literally done more than most people do all damn day. Well, not most people, but a lot of people. It's sort of like that old Army commercial. And then the only other newsworthy thing of note in my life is I listened to Texas Tech get beat by Arizona and lose the number 7 ranking all the way down to number 14 by, 2 points. In the last 2 minutes of the game, it was, talk about disappointing. But if you want to be disappointed even further, the first news up for the day is New York Democrats proposing a proof of work mining banning bill or something like that. They're on about Bitcoin. New York doesn't want Bitcoin. They've done everything that they can do, and they're going even further. And we've got more. It's all the news you can use right here on the Bitcoin and Show. I'm your host, David Bennett. We're going to be talking about Binance as well as Japan, and BlackRock is also in the news, by the way. Bull Bitcoin released their wallet on iOS. It is now available everywhere. And I think that they've got a deal worked out with the Liquid Network over there at who the hell is it? Adam Back and his crew over at Blockstream put up the Liquid Network a few years ago. It's gotten it's a side chain, but it really hasn't gotten that much adoption. But I guess Bull Bitcoin is getting into it. Maybe we'll hear more about it later. The S&P 500 will be in the news, as well as Charlie Schwab. That's right, our old good friend Chucky. They're going to be doing something with Bitcoin. And Michael Saylor, of course, is going to round out the episode. Just because, dude, why not? All right, so New York Democrats propose a companion bill targeting proof of work mining. They're specifically targeting proof of work mining, Vismaya V, bringing it to you out of Decrypt. New York lawmakers launched a legislative strike against crypto mining on Friday, including a companion legislation to a Senate bill that would force proof of work miners to pay high taxes based on their electricity consumption. On Friday, Assembly Bill A9138 was introduced in the New York State Assembly by Democratic Assembly member Anna Kellis and referred to the Ways and Means Committee. The bill would impose a excise tax on electricity used by businesses engaged in that dirty, awful, nasty digital asset mining under the proof of work authentication method. This measure is a companion to the S8518 bill introduced earlier this month by State Senator Liz Krueger, chair of the Senate Finance Committee in the New York State Senate. So Bitcoin getting it from both ends. Both bills pursue identical goals as they require crypto mining companies to pay into New York's energy affordability programs based on their electricity consumption. Operations consuming up to 2.25 million kilowatt hours annually would pay nothing, according to the bill. The rate then jumps 2 cents per kilowatt hour for consumption over 2.25 million, and blah, blah, blah. It goes on and on and on until you get to 5 cents per kilowatt hour for consumption exceeding 20 million kilowatt hours annually. That's, do the math on 5 cents per kilowatt hour when you're doing 20 million kilowatt hours annually. That ends up being quite a big number. Quote, this bill ensures that the companies driving up New Yorkers' electricity rates pay their fair share. So tired of hearing this phrase bandied about, while providing direct relief to families struggling with rising utility costs. Senator Kruger said in a statement when introducing her bill. Mining facilities powered entirely by renewable energy systems and operating off-grid would be able to dodge the tax, a provision designed to encourage sustainable practices within the digital asset sector as per Bill A9138. Excuse me. All collected taxes, interest, and penalties would flow directly to energy affordability programs administered by the Department of Public Service in consultation with the Energy Affordability Policy Working Group. If passed, the tax would take effect January the 1st, 2027, applying to all taxable years thereafter. Both the Senate and Assembly versions remain in committee. The move resembles those made by Northern European countries like Norway and Sweden. Nick Puckrin, crypto analyst and co-founder of the Coin Bureau, told Decrypt. While those were not explicit bans, he said, quote, the removal of previous advantages essentially made mining unavailable. We may be seeing the same thing playing out here, and the result will be the same. The irony is that moves like these don't tend to lead to cleaner practices. They just push mining operations out of state, Puckrin said. Asked whether mining operations would simply relocate to more crypto-friendly states, Puckrin said it would be the obvious answer, as moving will be easier and cheaper than trying to comply with punitive regulations, and there are still plenty of much friendlier options within the U.S. Let's just be clear, it ain't exactly that cheap to pull up stakes and move your entire mining operation to someplace like Texas. And Texas would love to have them. I mean, Texas at this point is like a miner's free-for-all, right? But still, pulling all those things off the shelf, packing them all up, moving them all out, negotiating new electricity contracts, siting a new site. It's not like you can pick up the building and its foundation and just, I don't know, helicopter it into Texas. You got to leave all that shit behind. So it's not an easy move. It's still punitive insofar as they're going to have to expend a lot of money to be able to make that move. So I kind of expect some of these guys to try to stick it out as long as humanly possible. And maybe during that time, they renegotiate all these contracts and make plans to move. But I doubt that if this thing passes, that you're just going to see mining companies shut down operations and then just immediately move. Right. So, but they have some time. They'll have a little bit over a year to figure this shit out if this thing passes. But we'll, again, as always, we'll have to see. But Binance playing a little bit of dirty pool, old man. Binance bans more than 600 accounts over, quote, unauthorized third-party tools. Naga Avayan Namayo has got this one for the block. Binance has banned more than 600 user accounts for employing unauthorized third-party tools, the exchange said in a statement. The centralized crypto exchange added that effective immediately, accounts found to be using such tools or otherwise violating the terms of Binance Exchange, Binance Wallet, or Binance Alpha may face permanent disqualification from all Binance activities and forfeiture of any profits earned in alpha events, quote, following a review by our team. Over 600 accounts were banned last week for using unauthorized third-party tools. Yes, we know. Please, let's move on. While Binance did not detail the specific tools implicated, recent official guidance and user safety posts by the company warned that unapproved trading bots or scripts, API misuse, and account sharing can trigger suspensions under the platform's terms of use. Those terms, which were updated October the 10th, govern all Binance activities with product-specific rules applied to features like Alpha, Binance's pre-listed listing token discovery venue integrated with the Binance wallet. The exchange also called on users to report suspected abuse, offering a bounty, of up to 50% of reclaimed profits to the first verified reporter in each case. In other Binance-related developments, the exchange recently completed its acquisition of South Korea's GoPax. Whatever. That's not what's going on here. So if you ever thought about the crypto exchange stuff being a great big casino, which you should, that should also bring to mind something else: gaming. This is the exact same kind of terms of service that you see when you get an account going on with some, MMO, like a massive multiplayer online role-playing game or something like that. The employment of bots, to run around and just do mining for you so that you can trade it to another character. They're called mules, right? So this is the exact same thing, and it's funny to see the exact same mindset of players, or I'm sorry, seasoned investment professionals using the exact same crap, that gamers would use. But I don't really blame them. I mean, why wouldn't you? If you can automate something like this, then you are going to automate something like this. It's just don't get caught, because you're going to get banned and all your money is going to be absconded with. Maybe Binance will drop it into a Japanese account, because Japan is now ready to open the doors to digital assets for their banking sector. Atlas 21 has got it for you. According to local media reports, on October the 19th, that was yesterday, Japan's financial services agency is considering allowing domestic banks to trade and hold Bitcoin and other digital assets. As reported by the Yomiuri Shimbun newspaper, the financial watchdog intends to launch discussions to reform the current guidelines that prohibit national credit institutions from owning digital assets. The goal of the proposed regulatory reform is to establish a system that would allow Japanese banks to buy and sell Bitcoin and other cryptocurrencies in a way similar to how they currently trade stocks and government bonds. The FSA is also evaluating the possibility of authorizing banks to register directly as exchanges. Now, this move would aim to simplify crypto market access for retail investors. Pausing just to say, yeah, that's going to be a little dangerous, because you're going to be able to trade directly out of your savings account if you're a Japanese citizen. So, wow. There should be some gateways. There really should. I know that there's like traders out there who would like to see my head on a chopping block for saying the following, but there really should be some gatekeeping between your stash of liquid capital and being able to trade it directly on the market. Like, you should be able to go to your bank and say, look, I need $10,000. And you take that and then you move that to some dipshit exchange, and then you can lose it all there. But at least there's a gateway that you have to pass, right? A mental check. Do I really want to gamble all my money away on shit coins? Yeah, you know what? I do. Oh, okay. That's your decision. But being able to wake up one day because and then read a tweet from some idiot saying that, giving you the name of the shitcoin and it's going to be the next Bitcoin, and then be able to trade directly out of your savings account, and God only knows what other instrumentation you may have in that Japanese bank. This is a dangerous situation, so be aware. Okay, so in parallel with this opening, Japan's Financial Services Agency is stepping up its efforts to ensure the integrity of the digital asset market. According to the reports, the FSA is preparing to introduce regulatory amendments that would explicitly ban trading based on non-public information. The new rules would impose financial penalties proportional to the illicit profits obtained by offenders. So that means no insider trading. Okay, we'll tell that to some of our senators, all right, and representatives over here in the United States. I would love it. Absolutely love it. if we actually enforced, insider trading laws on everybody that they should be enforced on. Actually, everybody. There's nobody that should have insider track. The only people that have insider track that I think would actually be able to legally do something with it is the people inside of the company themselves. And I know that's problematic all by itself, but if there was, because they're the guys at the company, the people at the company are the actual people that are going to make something happen. If anybody should be able to be allowed to trade on that information, it should be the people that are actually manufacturing the information itself, because they're making the thing that they're going to trade on happen. But even that's not allowed. And yet we have a couple of senators and a couple of people in the House of Representatives over here who are stinking rich to the tune of a couple of, multiple $100 million of net worth on a public servant salary. It does not take a rocket scientist to figure out that when Nancy Pelosi trades better than Warren Buffett, she's not that good. She's trading on insider information, and she should be in jail for it or something. I mean, this becomes ridiculous. But at least the good people over in Japan, they're not going to have any of it, right? Yeah, sure, man. Sure. All right, hold on. I think I'm missing a story here for some reason. Did I get to that one? Nope. I'm right on track. All right, well, here we go. Did you feel dirty? You know what's coming. Did you feel dirty when I was talking about all that insider trading? Well, I got some news for you. SoapMiner at SoapMiner.com will get you clean, get you nice and squeaky clean. You can get away clean with SoapMiner.com, and you can go find it at SoapMiner.com, where my good friend SoapMiner hand makes soaps. 100% beef tallow soap. His base soap is 100% distilled water, 100% grass-fed beef tallow, and lye. That's it. That's his base soap. He actually sells that as rough cut tallow soap, but then he'll do stuff like add pine tar, so you can get pine tar tallow soap, goat's milk tallow soap, lemongrass, cedar wood, orange clove, lavender, tea tree, peppermint. Comfrey. He's got a Comfrey 100% beef tallow soap, Earl Grey tallow soap, redacted tallow soap that's got raw carbon in it. He's got body balms. He's got a deodorant. And what else has he got? He now has 2 full pages. Okay, well, maybe not 2 full pages, but he's got 2 pages of products. He's got 2 kinds of deodorants. He's got 2 kinds of lip balm. Dude, SoapMiner at SoapMiner.com. Get 10% off of your purchase when you use the code Bitcoin and then that way it also lets SoapMiner know that I made the sale for him, and SoapMiner will be able to take part of the only value for value advertising that you will ever find on the internet. And that's here at the Circle P in the Bitcoin and Show. Circle P is open for business. It's pleb run, right? It's just plebs that have goods and services for sale to you, other plebs who want to buy those goods and services, but you got to buy them in Bitcoin. If you're not selling your goods and services in Bitcoin, you're not in the Circle P. This is the way it works. Moving on. BlackRock has launched a Bitcoin exchange traded product, an ETP, after the United Kingdom lifts the trading ban. Oh, thank God we can bring the word of the Lord into the streets, into the UK now via BlackRock. Ezra Reguera has it for Cointelegraph. BlackRock launched a Bitcoin-linked exchange-traded product in the United Kingdom following the Financial Conduct Authority's decision to ease restrictions on crypto investment vehicles. On Monday, the asset manager's website showed that the iShares Bitcoin ETP had been listed on the London Stock Exchange. According to the Sunday Times, the product, which is structured as a Bitcoin-linked security, will allow investors to buy fractions of Bitcoin through units starting at about $11. 11 United States dollars. Wow, you can get into Bitcoin for $11. I can get into it cheaper over here, but whatever. The ETP is designed to mirror BTC prices while trading within a regulated framework, allowing investors to participate in the crypto market through traditional brokerage accounts. It allows UK-based retail investors, not institutional, retail investors will be able to gain exposure to Bitcoin without directly holding the asset or trading it on crypto exchanges. BlackRock is one of the most successful issuers of Bitcoin-linked ETPs, according to Value. The company's iShares Bitcoin exchange-traded fund has net assets of over $85 billion. The move comes weeks after the UK softened its stance on certain crypto-linked ETPs. On October the 9th, the FCA lifted its 4-year ban on crypto exchange-traded notes, or ETNs. The regulator said investors can access these products through FCA-approved exchanges based in the UK. David Gill, FCA Executive Director of Payments and Digital Finance, said that since they restricted retail ETN access, the market has evolved. He said that products are now more mainstream and better understood. The crypto ETN is traded similarly to other securities while its underlying assets are held securely by regulated custodians. While it softened its stance on ETPs, the regulator said its retail ban on crypto asset derivatives will remain. However, the FCA added that it will keep an eye on the market and consider its approach to these high-risk investments. Apart from the ETNs, the UK also moved to allow asset managers to use blockchain technology for fund tokenization. Your fund now on a blockchain. On October the 14th, the regulator said the move aimed to drive innovation and growth in asset management. The regulator recognized that tokenization has the potential to drive fundamental changes in asset management. Yeah, it does, if and only if you actually understand this quote-unquote blockchain technology and are not just using it as, well, a catchphrase. Hey, everybody's saying this word blockchain. I don't really know what the hell it means, but we gotta put it up there. We gotta go locate somebody and pay them $150 an hour to draft some kind of news statement or something, press release that we can show that we're hip, man. Hello, fellow kids. Here's our ETP on a blockchain. It's all so tiresome. Let's run the numbers. Woo! It's a wild ride in legacy markets today. Brent North Sea oil is down a half point to $60.94 a barrel. West Texas Intermediate is down 0.17% to $57.44. But hold on to your ass, because natural gas is on fire. 12.5% to the upside this single day to $3.38 per thousand cubic feet, erasing all the turmoil that has been going on for the last few days. Natural gas, I am convinced that natural gas is the future, the energy futures traders hedge. I firmly believe that. Most of the time when oil's going down, natural gas goes up. And then most of the time when those directions, when oil's going up, natural gas goes down. So I tend to look at natural gas as something that isn't really affected by news. It's more affected by secondary news. Like if there's bad news about oil, like we've got too much of it, or the price from the Saudi Arabians are going down, natural gas has this tendency to make it up on the other side. I think it's a hedge. So just because it's up 12.5% today probably doesn't mean that there's this somebody picked up a phone and had an extraordinary need for shit tons of natural gas. I'm just saying, I'm not a professional trader over here, but gasoline itself is down 0.5% to $1.82 a gallon. And I call BS on that too, because gas prices have not gone through the floor where I live in Eastern Washington. Literally the floor is $4 a gallon. it's still at $4.28. And it was $4.28 a gallon when gasoline was like $3.50. It was $4.28 when gasoline was $2.50. It was like $4.14 when gasoline was, up $2. Now it's at $1.87. I just drove by the gas station. It's still $4.28 a gallon. So I don't even know. Whatever. Merbon crude is down 1% itself to 62.81. All your shiny metal rocks are having a good day. Palladium up 1.25. Gold, new all-time high after posting 3.6% to the upside, 43.65.5 for the shiny metal rock. Platinum, 2.3% to the upside. Silver is up 2.6 to 51.42 an ounce. Copper is up 1.5 points. Ag is mostly in the green today. Biggest loser is lumber, 3.25 to the downside. Biggest winner is coffee, 2% to the upside. Meanwhile, live cattle up 0.7%. Lean hogs down 0.15. Feeder cattle up 0.08%. S&P is up 1.16%. NASDAQ up 1.4%. The Dow is up 1.18%. Wow, that is a 550-point move to the upside for the Dow this morning. So take that however it is you will. S&P is up 1.27%. Meanwhile, Bitcoin just chilling out at 110,640. We got up to damn near 112,000 over last night or something like that. But then this morning, Trump opened his mouth about China tariffs again. Now he's talking about 155%. I guess he's mad again. I don't know. I wish Orange Man would just kind of shut up sometimes, because every time he opens his mouth about China, everybody gets wrecked. It's still a $2.21 trillion market cap, though, and we can now get 25.4 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,937,185 and a half of. Average fees per block are low, 0.02 BTC, taken in fees on a per block basis. There's about 23 blocks carrying 38,000 unconfirmed transactions waiting to clear at high priorities of 5 sats per VByte. Low priority is going to get you in at 3. Whoop-de-doody day. A new all-time high for hash rate, 1.12 zettahashes per second. Man, it's like whole containers full of miners are just on fire or something right now. 1.12 zettahashes per second. Okay, Fountain.fm has a new look to their website, and it just happened, so please bear with me, because this could get weird. The way that I'm looking at it is very different than what I'm used to. But from Tortillas Everywhere, Kaz Peeland, 500 sats says boost. Richard Dick Whitman, 200 sats says hello, David. Permanerd 210 says, I never thought I would hear Bitcoin compared to tortillas, but there you go. Well, this is the Bitcoin and show. I try to keep it fresh for you. Wartime with 133 says cheers. And he's got another 133 with an icon an emoji that I can't read. Please don't ask why. Mr. Sat Stacker with 10,000 Satoshis says, sir, thank you. No, thank you. And that is the weather report. Welcome to the part 2 of the news that you can use. Bull Bitcoin launches Bull Wallet on iOS. This is out of Atlas 21, by the way. Bull Bitcoin has announced the global launch of Bull Wallet, a mobile Bitcoin wallet that aims to reconcile the technical needs of experienced users and the accessibility needed for beginners. Now available in both iOS and Android, the wallet focuses on privacy, security, and ease of use. Francis Pouliot, I think is how you pronounce it, founder and CEO of Bull Bitcoin, stated, quote, Bull Bitcoin is Bitcoin only, fully open sourced, and built to prioritize privacy, security, and simplicity. This is only the beginning. We will keep improving it forever, end quote. Among the technical features, the application adopts a descriptor-based SegWit native architecture and uses the Bitcoin Development Kit library. The wallet supports BIP39 seed phrases, that's good, and allows connection to full nodes or Electrum servers, and that's even better. Additional functionalities include manual UTXO management, the replace by fee option, and testnet compatibility. The source code is publicly available. The application does not collect user data, does not send push notifications, and does not track IP addresses. It also supports the pay join protocol. The wallet also introduces BIP85 based secret derivation and confidential transactions via the Liquid sidechain. So there's where Liquid comes in. Bull Wallet operates on 3 networks: the Bitcoin mainnet, the Lightning Network, and Liquid. Using non-custodial atomic swap technologies based on bolts, users can transfer funds between the 3 networks. Oh God, all in one wallet? Shit, I'm going to have to look at this. For Lightning payments, the wallet offers a user experience without the need to manage channels or liquidity. Small payments received on the Liquid network are automatically converted to Bitcoin once a customizable threshold is reached, set by default at 0.01 Bitcoin. For Android users, Bull Wallet offers optional integration with the Bull Bitcoin broker, allowing purchases, sales, and payments directly from the wallet. The wallet can also be used together with a hardware wallet. Initially, it will be compatible with Cold Card Q1, with integrations planned for other devices. At launch, Recoverable, oh, that's nice, like recoverable, but Recoverable, B-U-L-L, is included, a new backup solution for hot wallets. The company has outlined a roadmap that includes integration of the ARC network, support for silent payments, secure and anonymous metadata backup, full support for or of all major hardware wallets, multi-sig wallet and mini-script integration, nostr-based anonymous chat, and Lightning Network addresses. Dude, this is an action-packed wallet, man. My wallet is action-packed over here. And no, I'm not I do not get sponsored by Bull Bitcoin. I'm just reading this and I'm like, I really like this. I mean, Liquid and Lightning and Bitcoin mainnet. And you can trade between all 3 inside the wallet. I mean, yeah, okay, I'm not as excited about Liquid, but being able to trade between Lightning and Bitcoin main chain, submarine swaps and opening and closing channels, and I hope it represents all of the potential there. That it just means that this is a wallet that I might really want to look into, because right now I use a couple of different ones. Spectre is my main one. I've been using that one for a long time, and then there's Sparrow. I mean, I really like Sparrow, but to have something that can jump between 3 different chains, or actually not even 3 different chains, it's like the Bitcoin chain, the Lightning network, and the Liquid. I don't really want to say chain, so I'll just call it the Liquid network. There could be some real possibility there, and it may even force a little bit of adoption, a little bit more adoption than normal for the Liquid network, which is, like I said, it's been around for years. It just doesn't really get a whole lot of traction. It's, and people will say, well, it's another shit chain. Okay, well, people said that about Liquid or Lightning as well, and they still say that about Lightning. It's not real Bitcoin, whatever. I've heard all these arguments before, but I've been using Lightning Network for so long, and it's just such a part of my everyday walking around stuff that I just take those arguments and I just throw them out the window, because for me, it's just all Bitcoin. But we got to move on to the S&P 500. be standard and poor all at the same time. 500, S&P 500 and gold can now be traded in Bitcoin terms. This is kind of interesting. Vivek Sen, Bitcoin Magazine, in a significant development for global financial markets, Roxom, Roxom, has launched Bitcoin-denominated perpetual futures. Oh, God. Okay, so it's not as exciting as I thought, but you got to know about it. I mean, I got to know about this stuff, so you're going to have to know about it too, because this stuff affects us. They've launched Bitcoin-denominated perpetual futures, enabling traders to benchmark and trade major assets like the S&P 500 and gold directly in Bitcoin terms. This innovation marks the first time that traditional assets, historically priced in dollars, can be measured against Bitcoin as a unit of account. Pausing to say, that's going to confuse the living shit out of people. Look, I get maybe we should just be pricing everything in Bitcoin. I understand the argument. The fact of the matter is you're fighting volatility. And I'm not talking about in the trade. I'm talking about in trying to figure out what something is valued at. And I'm not saying that this is a bad idea. I'm just saying that I cannot wrap my head around what it would be like to be like executing trades like a madman, ass and hair on fire all at the same time, and in my mind having to juggle the volatility of Bitcoin. So all I can say is good luck. But the launch comes at a time when de-dollarization trends are accelerating globally, with central banks diversifying reserves and BRICS nations increasingly settling trade outside the US dollar system. According to BitcoinTreasuries.net, public companies, ETFs, and sovereign entities now hold more than $150 billion worth of Bitcoin, representing a 400% increase year over year, quote, for decades. Markets have been priced in currencies shaped by monetary policy and politics. By introducing Bitcoin-denominated benchmarks, we're creating a reference standard that is neutral, transparent, and global. This launches the foundation for a new financial era, said Borja Martel Seward, Roxom's co-founder. The introduction of Bitcoin-denominated futures represents a structural shift in global finance, potentially accelerating Bitcoin's evolution from a digital currency to a store of value, and now to a foundation layer for global capital markets. Roxom's platform operates 24/7, introducing a more accessible and efficient market structure that bridges traditional finance with the Bitcoin ecosystem. As the first capital market exchange built for a Bitcoin-denominated world, Roxom aims to provide regulated institutional infrastructure that transforms Bitcoin from a reserve asset into a unit of trust and long-term stability. The company's mission focuses on connecting Bitcoin and traditional finance through secure, credible, and transparent markets. The ability to trade major market benchmarks directly in Bitcoin terms could provide new opportunities for portfolio diversification and risk management. Notably, both gold and the S&P 500 have been declining when priced in Bitcoin terms over the past year. While gold has reached new nominal highs in USD terms, its value relative to Bitcoin has fallen by approximately 45% since January of 2024. Similarly, the S&P 500 has shown weakness of its own when measured in Bitcoin terms, despite hitting, again, nominal highs in terms of the United States dollar. The index now trades at approximately 0.078 BTC per unit, down from 0.12 BTC in early of 2024, representing a decline of 35% in terms of Bitcoin. This divergence suggests a growing shift in market dynamics where traditional safe haven assets and equity markets are underperforming Bitcoin as a store of wealth and unit of account. As institutional adoption of Bitcoin continues to grow, Roxham's platform provides a crucial bridge between conventional financial markets and the emerging Bitcoin-based financial system. This integration may help facilitate Bitcoin's broader adoption as a standard unit of account in global finance, marking a significant milestone in the asset's institutional evolution. Okay, I understand what they're trying to do. I really do. But again, it's okay, look, it's just going to be a hard sell. Bitcoin itself is a hard sell. It just is. Having somebody who's used to dealing with trading gold and S&P in terms of the United States dollar, which is like almost everybody, having them say, you know what? There's just way too much volatility in the United States dollar. And they'd be right. There is. But when they also in the same breath say, I'm going to use Bitcoin instead, I'm sorry, but I got to kind of laugh. So you're a fish frying in a pan and you get out of the frying pan and into the fire. Oh, okay. Hey, if that's the way you want to play it, man, Bucky for you. But dude, all I can say is, 1, good luck. 2, I am glad that somebody is doing this, but I think they might find themselves a little bit too early to this game. I hope I'm wrong. I really do. I hope I'm wrong. Now moving on to Chucky, not Chuck E. Cheese, Chuck Schwab. Charles Schwab sees 90% spike in crypto interest, and they plan a spot Bitcoin trade in 2026. I guess they're going to allow it. I don't know. Micah Zimmerman will tell us more out of Bitcoin Magazine. Charles Schwab is seeing booming engagement from retail investors in its crypto products. Again, pausing to emphasize retail. Everybody's asking, where's retail? Where's retail? Well, I think that they're being held up. I literally think retail is being held up by people like Charles Schwab and JP Morgan and all the rest of these cats that are just now trying to figure out how to open the doors to their brand new products. But this is not institutional. This is not commercial. This is not any of the other stuff, man. This is like the plumber with the Charles Schwab account. I mean, Charles Schwab literally represents retail investment in the United States, and they've been the poster child for retail investment in the United States for 50 years. So it's kind of an important deal. But in an interview with CNBC CEO Rick Wurster said that visits to Schwab's crypto platform have increased by 90% year over year, signaling strong investor appetite for Bitcoin ETFs, Bitcoin futures, and other crypto exchange traded products. Schwab clients now hold roughly 20% of all crypto ETPs, exchange traded products, in the U.S. Wurster emphasized that the company is responding to this demand by providing a wide array of crypto investment options and educational resources, thank God, combining digital access with traditional client support through calls and branch offices. Charles Schwab will also offer spot Bitcoin trading in the first half of 2026. Rick Wurster, CEO, shared the news during Schwab's third quarter earnings call, where the company reported $134.4 billion in net new assets, marking a 48% year-over-year increase. Earlier this year, the firm announced plans to offer Bitcoin and Ethereum trading driven by client demand, noting many wanted to consolidate their crypto holdings with Charles Schwab. Wurster's thoughts in the Charles Schwab's earnings call marked the first time the bank put a tentative date on the initiative. The push into crypto comes alongside Charles Schwab's broader record-breaking quarter. Total client assets, total client assets reached $11.59 trillion. That's trillion with a T. 11.59 trillion, up 17% year over year, and daily average trades jumped 30%. The firm's strategy, Worcester explained, focuses on offering both advanced trading platforms like Thinkorswim. Oh, come on. It's literally spelled think or swim, Thinkorswim, and guidance for new investors, making crypto accessible and understandable for a broader audience. Earlier this month, Morgan Stanley released their report telling clients to allocate at maximum between 2 and 4% of their portfolios to crypto, primarily Bitcoin, based on risk profiles. The report described Bitcoin as a scarce asset akin to digital gold and suggested it could play a legitimate role in diversified strategies. It recommended regular portfolio rebalancing, ideally quarterly, and gaining exposure through exchange-traded products to manage volatility. Because, God forbid, volatility. The guidance followed the firm's expansion of a digital asset access via E-Trade and coincided with Bitcoin reaching a new all-time high of around 126,200. Earlier this week, U.S. Bank announced their new digital asset and money movement organization in hopes to, quote, accelerate development of and grow revenue from emerging digital products and services such as stablecoin issuance, cryptocurrency custody, asset tokenization, and digital money movement, end quote. Also, institutional holdings in Bitcoin ETFs rose to $870.7 million in the third quarter 2025. That's up $117.3 million from the previous quarter. Kind of a throwaway sentence there at the end. It needed to come somewhere else. But again, it is recommended that regular portfolio rebalancing occur quarterly. I've got too much money in Bitcoin. I need to sell some and get me some of that NVIDIA because I hate volatility in my portfolio. Do you hear yourself? This is not the asset that you want to be rebalancing. Look, this is, I got to say it because otherwise I'm going to get sued if I don't, even though I'm a small fry podcaster in Bitcoin. If you've got a portfolio that's got Bitcoin in it, don't rebalance the Bitcoin. Rebalance everything around it. All right, just rebalance everything around it. And if for whatever reason your rebalancing suggests that you actually sell some of the other assets and buy more Bitcoin, then do that, But don't sell the Bitcoin to buy more treasury bonds if that's what your financial guy is telling you, because that's just dumb. Rebalancing has its place. And it's very, very far away from selling any of your Bitcoin. Let me just say that. All right, last up for the day. Michael Saylor's strategy takes another small step toward 700,000 Bitcoin held in parts, Cointelegraph. Michael Saylor's strategy, the world's largest public Bitcoin holder, added to its BTC stash last week amid another market sell-off following the Black Friday crypto crash. I guess they finally started using the term Black Friday. So you want to know the number? This mega awesome number of BTC that Saylor bought? Yeah, it's 168. Not 1,680. Not 168,000. No, not 16,800. No, 168 Bitcoin. It's worth all of $18.8 million. He bought it last week, according to data. The latest Bitcoin acquisition was made at, wait for it, an average price of $112,051. He can't win right now, though Bitcoin slipped below 104,000 on Friday amid the shockwaves of the market crash October the 10th. With the purchase, Strategy now holds a total of 640,418 Bitcoin purchased for about $47. $47.4 billion at an average price of $74,000 per coin. Strategy's latest 168 BTC purchase was another small addition in a series of minor buys, a notable contrast to its massive Bitcoin hoarding earlier this year when monthly purchases averaged around 25,000 BTC in April and in May. Based on an average monthly buying pace of 5,620 Bitcoin over August and September, when Strategy purchased 7,700 and 3,500 BTC respectively, it would take roughly 11 months to reach a total of 700,000 BTC on its balance sheet. You never know. That may be exactly what he wants to do. But this latest Bitcoin purchase followed a 220 BTC buy for Strategy for 27.2 million the previous week, which came as BTC briefly hit the new all-time high above 126K before plunging, I tell you, to 110,000 in the October 10th Black Friday market crash. Whoop-dee-doo. Strategy's Bitcoin purchases came as its Common A stock, MSTR, extended losses last week, falling back to levels not seen since April of this year. According to data from TradingView, MSTR slid below $284 last Thursday, marking a continued decline of 21% since October the 5th. Despite the losses, Strategy's stock is still up 50.4% from where it stood 1 year earlier, with a massive 1,650% surge in the past 5 years. The lowest price of MSTR shares so far this year was about $238 per share, recorded April 7th, while the highest was in July at more than $455. Talk some volatility there. While Strategy's Bitcoin buying has slowed notably in recent months, many companies have followed its lead with BTC treasury plans, aggressively accumulating the asset. Yeah, I wouldn't say aggressively accumulating. I'd definitely say aggressively announcing announcements, but not so much as general accumulation. But hey, let them do whatever they're going to do. Metaplanet, a Japanese hotel company that went for Bitcoin treasuries in July of 2024, has hoarded 30,823 by September, only to see its enterprise value fall below the value of its Bitcoin holdings last week. Yeah, it went down to like 0.98 was the last number I saw. Metaplanet's market to Bitcoin NAV, or MNAV, slipped to 0.99 on Tuesday and then tumbled deeper to, 0.9 on Saturday. So 0.90. Damn, son. You're losing your shit hand over fist. Anyway, while the potential outcomes of the event are yet to be seen, Metaplanet has not bought more Bitcoin since it made its most recent BTC acquisition, and that was announced on September the 30th. So that's it, man. That is all I got for you today. I do hope you enjoyed hearing about all the news that you can use. I'm just going to go ahead and kill it here, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.